Welcome to Satya Skills. In this video, let us learn about priority sector lending and how this priority sector was introduced in Indian banking system. Priority sector is a sector which is given priority in offering financial services by the banks. The concept of priority sector lending was the most successful and adventurous decision of the government of India. We all know that India is an agricultural country, predominantly rural economy, and majority of industries are agro based industries, and large percentage of exports are from agriculture and rural sector. Agriculture and rural sector contribute significantly to the national income and also support a large percentage of employment. All this we all know. In spite of economic significance, agriculture sector and rural industries were completely neglected by commercial banks till very recently. Why? Traditionally, commercial banks in India have been providing different banking and financial services exclusively to the corporate sector, industries, big business, enterprises. Commercial banking developed in India around 200 years back. During those years, they never diverted attention towards several other sectors, including rural and agriculture sectors. They were providing credit facilities only to the profitable sectors. Why? The reason. The concept of modern banking is an imported idea by European traders to India for their benefit. Thus, traditionally, banks are designed to cater to the needs of trade, and they formulated all banking services according to needs of traders. In India, till very recently, majority of banks were owned by industrialists, that is, up to nationalization 1969. Therefore, banks concentrated their activities only on those selected segments of the economy. In India, banks were established and developed only in urban areas, metropolitan cities. They were away to rural and semi-urban areas. Therefore, they have no knowledge of agriculture, rural sectors and small industry. They do not have any mechanism or guidelines to deal with these sectors. Banks are pure business organizations working with object of profit maximization. Their lending policies were guided by this objective. They provided banking services to those sectors which were profitable with less risk. Another reason, traditionally Indian banks' lending policy was based on security offered as backing to the loans. Those sectors which can offer a tangible collateral that carries less risk enjoyed bank loans. Small farmers, small industry, exporters who are unable to show tangible collateral were deprived of institutional finance. The Indian agriculture and small industry, tiny business or unorganized sector, their land holdings are very small. The business turnover is very limited. Income generation is highly restricted to one or two sources. Due to these reasons, bankers never attempted to provide any banking service to these sectors. In India, agriculture is at the mercy of monsoons. Even today, agriculture is gambling. Till the sale of proceeds that reach farmer, any calamity can throw the farmer into losses. He is economically so poor, so weak, and he can never recover immediately from those losses. Due to the risk associated with agriculture, banks never ventured to support Indian farmers and rural industries. Small and cottage industries exports are equally risk associated activities. There were no proper insurance and credit guarantee facilities. Lending to small and cottage industries, especially exports, is a highly risk associated function. Thus, banks never attempted to support these sectors. Then some other reasons are there, like illiteracy of farmers, social obligations, ignorance of rules, rules and regulations of accounting is not possible for them, and banking practices, they have no idea, no surplus to deposit in banks, diverting loans to consumption purpose or to meet social obligations. These are the few reasons why certain sectors were neglected by banks. That's all in this video. All the best.